We're initiating coverage on Technicolor. Technicolor is listed in France, and it's a business that has been greatly simplified over the last decade or so. It had an enormous number of businesses within the portfolio, and that has been narrowed down to 3, which are all leading players in their particular market segments. These are Connected Home, which accounts for 56% of the FY18 revenues, Production Services, 20%, and DVD services, which are the balance. Now, these businesses are quite different in their dynamics, and it's probably easiest just to run through them separately. Connected Home supplies the equipment that sits inside a customer's household. Now, that might be a set-top box, cable television, might be a DOCSIS-type modem that receives the data into the household. This is a very large and competitive market, and so it's to a large extent commoditized, and there's been a pressure on margins from commodity prices and just from the natural competitive pressures in the market. Now, the reaction of Technicolor to this is to put in place a 3-year cost reduction program that is designed to have taken out around 140 million euros of costs on an annualized basis within 3 years, and this is a program that started in the second half of FY18. Production Services is a very different sort of business. Now, this is involved with the film, television, animation, computer games markets, supplying post-production, visual effects, and all the smart manipulation that is designed to make visual imagery more exciting and appealing. And as you can imagine, this has been a very exciting area, given the appetite for content and high quality content from the film industry and the emerging new content providers on the SVOD platforms and AVOD platforms as well. The issue for Production Services is not that it's a difficult market, more that it's actually a very buoyant market. There's an enormous amount of demand for high quality content that involves the visual wizardry that makes it, film and TV and games so exciting for the viewer and participant. So the issue is really one of capacity, and that's been putting quite a bottleneck on the business, which should be released as they can invest in more capacity globally. DVD Services from Technicolor works for all the major studio groups, so it's actually quite a concentrated customer roster. And historically, as those contracts were reached, they were designed for a more buoyant market. As they come up for renewal, it's Technicolor's intention to make those contract terms more reflective of the underlying conditions as they stand now, which should help improve the margins that they can earn from the business. Now, the business does have a quite heavy debt burden. At the end of the last financial year, there was gross debt of 1,024 million euros, which was equivalent to a net debt figure of 733 million euros. And it's obviously the objective of management to work on reducing that debt. Now, we see FY19 as being the nadir of the earnings profile, and H1 in particular will have been difficult because of the situation we describe in the Connected Home market and of the inefficiencies surrounding a particularly large project in Production Services. So we expect H1-19 for both earnings and cash flow to have been quite a difficult trading period, and we would expect also for a lot of that to be recouped in the second half before improving considerably in FY20 and thereafter. Now, the debt is structured predominantly as long-term debt from the European Investment Bank with a maturity of 2023. And in the interim period, the interest payments are relatively modest. So we expect the situation, as we get nearer to that maturity date, to have been one in which the company's financial performance has been improving.